Everyone's telling you Cyprus has a new 8% crypto tax, which is only partly correct, because most of them are reading the law wrong. The actual rate, if you set it up properly, can be 0%. My name is Benjamin, and I'm the founder of Cyprus-Consult. We've helped over 100 entrepreneurs, traders, retirees, and investors relocate here and structure their crypto properly. In the next few minutes, I'll show you exactly how the new law works, what you actually pay on a €500,000 profit, and the one mistake to avoid. On January 1st, 2026, Cyprus introduced Article 20E of the income tax law. It says profits from selling crypto are taxed at a flat 8%. Sounds simple? It's not. Because that 8% only applies if you're classified as an active trader. If you're a long-term holder, a hodler, you sit completely outside Article 20E. Your gains are treated as capital gains. And Cyprus has zero capital gains tax on anything except local property. So before you do anything else, you need to know which side of that line you're on. Because the difference is everything. Here's where it gets interesting. Most people stop at the 8%, but we go further. Most of our clients are active traders or run a crypto business. On paper, they pay the 8%, but we don't stop there. We put the activity inside a Cyprus Ltd company. The company pays 8% corporate tax on the realized crypto profit. Then, it distributes everything left as a dividend. And as a Cyprus Non-Dom, you pay zero tax on dividends, zero income tax, zero defense contribution. The only thing you pay is a 2.65% healthcare contribution, capped at roughly €4,770 a year. Let me show you what that actually means in euros, using a real-world example. Say your Cyprus company makes €500,000 in net crypto profit this year, 8% corporate tax. That's €40,000 to the government. You distribute the remaining €460,000 to yourself as a dividend. You pay zero defense contribution. You pay €4,770 in healthcare, and you keep €455,230. That's an effective tax rate of just under 9% on a €500,000 exit. Legally, inside the EU, on a fully whitelisted MiCA-compliant jurisdiction. Compare that to where you are right now. Belgium taxes the same profit as miscellaneous income at 33%, or as professional income up to 50%. That's up to €250,000. The Netherlands hits you with box 1, income tax, up to 49.5%. Germany taxes crypto at your full income rate, up to 45%. In Cyprus, for the exact same €500,000 profit, you pay €44,770 total. It's not even close. But here's the part nobody warned you about. The tax structure is the easy part. The hard part is banking. Cypriot banks are conservative on crypto. If you walk in with a wallet history nobody can audit, the account doesn't get opened. You need a CASP registered exchange like Coinbase or Kraken, and an EMI like Wise or Revolut as a fiat intermediary. From 2026, every EU exchange reports your transactions automatically under DAC 8. The tax office will see it all, so setting it up clean is no longer optional. If you want this structured properly, the company, the non-dom registration, the clean exit, the banking, all of it, go to cyprusconsult.com and book a strategy call. My team handles the entire setup from start to finish. You focus on the trades. See you in Cyprus.